Hi everyone, this is Tyler from ORATS, and today we're going to look at the unusual volume report from August 23rd. This is included in our earnings report package, which you can find in the link in the description. ORATS computes the total options volume in all tickers, and then shows in this report the tickers with the highest ratio of options volume today versus their 20-day average. We can also see the top 3 highest traded individual options along with their implied volatility and bid-ask spread at the time of the trade. Let's look at BEKE as an example. BEKE is a large real estate platform in China that has had a pretty bad month of August, as shown by the minus 35% drop we see here. What I find most interesting in this data is the 143,000 options traded at the $10 strike. Let's look at what this means. 143,000 options is a pretty sizable amount for a stock that has been dropping significantly over the last month. We know that these particular options are expiring September 17th for a days to expiration of 26. We also know the bid price for the strike was 20 cents and the asking price was 30 cents. However, what we don't know is whether these puts were bought or sold. If we knew this, we could tell if this big trader was bullish or bearish, which would be very helpful in guiding our strategy on this stock. Fortunately, ORATS provides a way to derive a pretty close answer. Using the change of the 30-day interpolated implied volatility, we can help determine if the volume was due to the buying or selling of options. The 30-day interpolated implied volatility, or IV 30-day as it is referenced in our data API, measures an accurate, smoothed market value reading for the option's implied volatility. We compute a more accurate measurement by producing clean historical data with a put-call parity, normalizing the IV skew, and using theoretical values instead of market bid-ask quotes. On the unusual volume report, you can see this value at the time of the trade as well as the value from the day before. In this example, the implied volatility had decreased from the day before by over 12%. A decrease in implied volatility usually is an indicator that this trader had sold the options. Keep in mind that this stock has been falling dramatically, and a purchase of this many puts would be a strong bearish play, which would push the stock further in that direction and cause implied volatility to snowball higher. Seeing a daily reversal of over 10% is a strong signal that this trader had sold puts and is expecting it to bottom out at that strike price. With all this information from the unusual volume report, I would not be surprised if BEKE is near its bottom, even though it had lost over a third of its value in the last month. And sure enough, at the time of this video, 20 days after we released the unusual volume report, BEKE is trading at $19, almost 20% higher than when it showed up on the report on August 23rd. If you have any questions about our unusual volume report or any of our other earnings reports, please leave a comment below. Thanks for watching, and I'll see you next time.